Hi everyone. I hope you had as good as a Monday as overall the stock market did. It wasn't anything super exciting, but it was constructive. The Nasdaq was able to rally 0.06% today, and so it was actually higher. Volume was below average, and lower than the Friday before. So while that isn't great, it's still good for overall what was basically a pullback day for the rest of the market. Despite the Nasdaq being up 0.06%. The other indexes didn't quite fare the same. The S&P 500 was up nothing, flat, up zero point zero 0.07 cents. Volume was lighter than the day before, so overall a constructive pullback session. On top of that, it did close higher than where it opened and had a nice intraday rally off the lows, so nothing to really be too upset about there. The Dow Jones Industrial Average pulled back 0.18% on volume lower the day before. That's a good way to pull back. The Dow Jones relative strength line continues to weaken. And the Russell 2000 down 0.14%, as you can see, off the intraday lows. And even though it doesn't show here, volume was lower than the day before. So overall, everything is okay. And also at the same note, the dollar continues to be overall strong. As you can see today, it had a pretty decent session. So with the dollar rallying and the market rallying, that is good. And on top of that, gold once again was down today. So everything is good no matter what you think of this rally, no matter if you hate it like I do because it's QE ZERP related, or you love it because for some odd reason you love socially planned non-free market economy. Whatever, it's fine. Whatever it is, it is. All I care about is the price action, and as long as we continue to make money, however it happens, it doesn't matter to me. There only one stock that isn't making money that has to be gotten that we have to get rid of today is JOBS. JOBS is closing below the 50-day moving average on strong volume. It has already done that once before, but it's failing to be able to hold the 50-day moving average. Is doing it again. So this is a 50% sell here. Jobs is a speculative position only in one of my accounts, so it's not a big deal anyway. Why is it not a 100% sell signal? The main reason is because it's still above the 55.47 low here. And if you really want to use the 55.15 low a day, you can, but 55.15 is close enough to 55.47. So basically what I'm using as a final cut loss is a close below the 55.47 level. So if it closed at 55.46 tomorrow, that's it. JOBS is out. But that's our only partial sell today, and it's a 50% sell. Don't want to get too crazy with anything else, so let's just look at all the stocks that did great today. FURX, I want everyone to look at the earnings per share and sales growth of this stock and look at the estimates for 2014. Sales have grown over 300% the past 7 quarters. On top of that, earnings are up 184% the most recent quarter, and estimates are for another 100% change as we go along. So this is definitely a stock to watch. Netflix continued on its pocket pivot point signal 2 days ago. Guess who's regretting not taking that long position? Whoops. Yep, you're right, me. And on top of that, BIIB is continuing to make a move out of a consolidation pattern on stronger volume. So plenty of things moving out there. VRX bouncing off the 50-day moving average on below average volume, but 2 days of decent price action and volume action overall. So, and ABV rallying off the lows there, very, very good. IPO wise, high IQ. Shutterstock continues to break out and look good. And then the Intelsat continues to also look good. And then one of my favorite stocks off the lows, InvenSense. Look at the earnings per share and sales growth recently. Look at the estimates. And look at all of this support off the lows back here in July, back in January, and back here in May. Heavy, heavy accumulation as it bounces off those areas. This time, though, we have some huge accumulation as it builds the right side following its outstanding earnings per share and sales growth rate that it recently reported in the most recent quarter. So overall, there's plenty of stocks that are doing good. Solar stocks, obviously. Sol, the leader. SPWR, I mean, and FSLR. I mean, just look at those two. Golly, man, I can't believe I missed those trains. And so overall, a lot of stocks are looking really good, even off the lows. Drive and Dang, I mean, it's just everywhere. Pega, another earnings per share winner back in February and recently again. So we've just got a lot of nice stocks out there that are putting in some pretty nice patterns, across the board as I show them to you. We do have 2 new long positions tonight. AMBA is breaking out of a base on top base on base pattern, you will be familiar with its previous base on base pattern breakout. It wasn't quite a breakout yet, though, as we were using a downtrend line to connect the most recent highs, but using the high a day or the highs in the end of March, beginning of April base, we now actually have a legitimate breakout to new highs. There now is nobody that is not in the money on AMBA, so it should be clear skies ahead. Nice volume on the breakout. The week intraday close, though, once again, just like before, might, have us with a position that will not work right away. It might pull back, so you can use a 50-day moving average as your final cut loss instead of the low a day if you want to. And also SSYS is breaking out of basically an ascending base pattern. It's also part of a base on base pattern. And a Zoom 2, just like whenever I gave DDD out as the first signal, I use Zoom 2 for my own personal eye to give me the overall great uptrend, because a Zoom 3 and Zoom 4 sure does have a whole lot of red on the chart. But a Zoom 2 gives the overall price structure into perspective, and you can see it's very tight, and DDD has worked out perfectly since then. And now its sister stock Stratasys is giving back-to-back pocket pivot point signal dates. Now we've got a surge in BOP and money stream to go along with it internally, which is like double confirmation with the volume and price signal. And as you can see off the April lows back in 2012, it's been under heavy accumulation during the uptrends. Ran into a bumpy road just like DDD lately, but it looks like all that resistance has been soaked up around the February-March lows, and now it looks like Stratasys wants to break out to new highs. So we'll see if it can follow DDD into that territory. So SSYS and AMBA, 2 percenters. I'm also going to be looking at putting BK into my options account with some call contracts, because it has enough volume traded overall that it can definitely make a good position for calls. Stratasys might also go into my calls. DDD, I already have calls on that. AMBA, no way. So we'll see if Stratasys has enough volume, but BK is going to probably be a trend following ad signal. Actually, it is going to be a trend following signal in my options account. Okay, everyone, have a great Tuesday.